Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So as you know, this is my portfolio. I've got 26 different companies in here. What I'm trying to do is build a portfolio that is well diversified. That means there are 11 different sectors in the S&P 500, and I'm trying to have a balanced portfolio. So inshallah, if one sector does absolutely amazing, then of course I do own some stocks in that so I can get the gains. If some sectors don't do well, of course then I will buy more of that, and so on. So just kind of have a balanced portfolio that's not just over concentrated on just one sector. Now there are 11 different sectors, and right now, as you can see, I've got a lot of the industrial, financials, information technology, materials is done absolutely well as well. Healthcare has now become my fifth option, basically highest in terms of the sectors. It used to be, I think, second at one point, and consumer staples is about 11, which is fine. Consumer discretionary and energy are basically almost non-existent right now, 4% and 3%. I don't have any utilities, and I don't have any communications and real estate. I don't think if I would be owning directly in real estate companies, but I would love to own some utilities and some communications in the long run. But right now, I'm trying to build it consumer discretionary. So in the last few weeks, I've been trying to do a little bit of research. I've been super busy, I'll be honest with you. I have not had a lot of time to do a lot of research or even share basically information with the communities and so on, because between work and home it hasn't been basically possible for me to do this. But the last couple of days I started doing a little bit of research to see if I can find a more consumer discretionary and possibly energy sector companies that I can add to the portfolio. So I've done a little bit of research. I found a few companies. There's one that I'm interested in. I want to share that with you guys today and show you the details. As always, I'll give you a little bit of information about the company. We'll look at the fundamentals, we'll look at the valuations, and we'll compare it with, of course, this similar sector, similar companies in that sell basically similar sort of products. As you can see, this is my current portfolio. Right now, as we speak, we have over £400 because I did not get the chance to invest just this past week because I did not have the time to actually do that. So what I'm going to do, inshallah, next week, this plus the 250, I'll be investing that, inshallah, and I'll let you guys know basically how much what I'm buying and so on. The other thing I'm going to do, inshallah, is this month was absolutely amazing when it comes to dividends. We're waiting for 2 more companies. If you're part of the Patreon, you will know that I've actually shared that with the community this morning. So if you have not basically joined us the Patreon account, it will cost you about 15p per day, and you get a lot of exclusive stuff. Okay, you get the Sharia compliant investing ebooks, you get all the buys and sales in real time, all the dividends that I receive. So I share everything there, as well as companies that I put together, high quality companies that potentially you would want to start with if you are basically new to investing. So if you can join us, that will be absolutely amazing. So what I'm going to do now is I'm going to give you a little bit of information about that company, and inshallah then I'll basically take it from there. And the company we're talking about today is Tractor Supply Company. This is one of the companies that they basically provide big goods. Basically, it's like a retailer for the farmers, basically. So everything to do from fencing to sprayers to chemicals, food for basically for treats, equipment for dogs and cats and all the other small animals. So they basically do a lot of these type of products for farmers. So if you are a farmer, this is the company that you would go to. And just looking at the year to date, it's up 33%, which is interesting. And for the 1 year, 40%. So I don't know if that straight away is extreme, screams overvaluation right now. But as you can see, the forward P is about 27. So what we're going to do is compare that with the last 5 years and so on. So we're going to jump straight into now this part and look at the financials, and then I'll give you a bit more information. So in terms of the stock price right now, we're looking at $286 per share. EPS right now is about over $10 per share. About 30.8 billion market cap. So it is not a small company at all. And it has a wide economic moat, which I like. Normally, a lot of the companies I'm trying to add to my portfolio, I want these companies to have a wide moat because I want the company to have a competitive edge, if you like. Current beta is actually quite low, which is nice. And the current P is about 27 and the forward P is about 26. Now, I think since I've actually done, since I've I've done the research. It looks like it's actually gone up a little bit, but maybe it's gone up so much in the last couple of days. We'll see. And the 5-year average, though, is about 23. So this means whether it's the current PE or forward PE, it seems it's still a little bit expensive. And when you look at the sector, which is the consumer discretionary, it's currently trading about 14 PE, and the S&P 500 about 29. Now, price to free cash flow right now, we're looking about 41. So seems very expensive in this situation. So let's see a bit more information. It has a dividend yield of 1.5%. So it doesn't have a huge dividend basically yield, which is not what I'm looking for. What I'm interested really is this part here. The payout ratio is quite low. The latest increase is about 7%, and the last 5 years, this is the bit that I'm interested in, 28%, which is absolutely huge. So that growth tells me, inshallah, if they continue doing that over the next whatever years, that's what I'm interested in. Okay, so the latest increase, the fact that it was 7%, is really good. 13 years of increase in that dividend, and the safety is about 68%. So it's not really it's safe, but is that borderline. So 60, below 60, we're looking at not being safe. Now, free cash flow, well, basically we've got less than a million, so 614 million instead of a billion. But remember, the company is about 31 billion. So I would expect that to actually slightly grow, and hopefully the growth for that free cash flow the last 5 years, we're looking at about 3%, free cash flow yield of 2%, and free cash flow margin of 4%. So this part here needs to improve in the long run. So right now, comfortable but not amazing. Okay, so nothing to really scream about. Profit margin 7%, operating margin 10%. Again, nothing great there. Return on equity and return on invested capital, really good. So the management are doing really good job in taking that money, reinvesting, and so on. The net income grew for the last 5 years about 15%, which is nice. The total return the last 10 years is about 17%, which is absolutely huge. There's some tech companies that don't even have that, so this is really good. And the revenue grew about 12% and EPS about 17%. So I really like this part of the company. So maybe the trajectory is better in the basically moving forward than it has been over the last whatever years. The fact is, this part needs to improve though. In terms of looking at the current ratio, we got one above one, which is fine. So that means they've got enough liquid assets in that they can actually liquidate in the next 12 months. Now, they're expecting the earnings to grow about 9% next year, and then 8%. Now, for this type of business, that's really solid. I would have loved if this was double digits. This probably would have given me a bit more reassurance that the company is heading the right direction. But 8% is not bad for the next 5 years for basically a retailer. Now, in terms of current price, we've seen it 286. And the fair value when it comes to Morningstar is $224 per share right now, 24% premium, and I do agree with them. Okay, and I'll share with the rest of you guys towards the end, but the actual valuation side of things. So right now, basically about 13% up and upside from where we are right now, undervalued according to Simply Wall Street. So $318 per share, which is quite high. Now, in terms of tip rank, next 12-month target price is 270. Okay, that is basically about 2% down, about 2-3% downside from where we are right now, and it's a moderate buy. Similar sort of a thing when it comes to seeking alpha. So all of these guys have kind of agreed is a bit expensive, apart from Simply Wall Street. Now, in terms of Sharia compliance side of things, we have absolutely no issues to worry about. So we're using Zoya, of course, and that's 100% interest-bearing debt and interest-bearing securities as well. Now, as you can see here, they're buying back their own shares, which is quite nice. You get over 1% dividend yield, and you're getting the basic shares up, buying back their own shares. This is a good idea, and I like the way companies are buying back, but I don't like when the companies are buying back their own shares, especially if the stock is basically expensive. They are rather companies buy their own shares when the stock is basically undervalued than actually when it's overvalued, because they could use that money to do something else. So that's just the financial side of things of this company. So we've got a couple of more things that we need to look at, and the next one is just to compare it and see if actually what is done over the last few years against the S&P 500. So for the 1 year, 43% total return. Total return includes price as well as dividends, and S&P 500 is only 34%. There are a couple of other companies in similar sort of retailers that have not done as well, of course. This one is actually done all right, but the other two have not. Wait, actually, this one is done well, over 100%. That's amazing for the excludes. Wow, interesting. 3% last 3 years we're looking at 43%, and they did beat the S&P 500 again. These companies have performed all right, so this one is done actually good, but 43%, which is absolutely amazing. Now for the last 5 years, 247, the S&P 500 only 93%. And then when we look at the last 10 years, 428, and we look at the S&P 500, 191%. So I like the fact this company, despite the being a retailer for the farmers and so on, is actually beating the S&P 500 over the last 10 years, and it's not just whatever this year. So a couple of more things I want to show you is moving forward now. What are we expecting? So we're expecting a flat year this year. So 2024, only 2% growth when it comes to EPS year over year, 9% when it comes to in 2025, then 11% in 2026, and then 2027 we're looking at basically about 10%. So absolutely fine, nothing really to worry about and so on. On the current revenue, we're looking at about 2%, 5%, almost 7%, and then 7%, and then so on. So I like the business. It's very stable. They have a really good dividend, and in terms of revenue growth, we're looking at about 5.7 billion in 2014 to right now $14.7 billion, and they're spending about $9.3 billion of that, which leaves them about $5.3 billion of basic gross profit. Then of course they have to pay for things like research and development, sales and administration, all of the stuff that companies need to pay for, and taxes and so on. And then that net income is now $1.1 billion. And I like that, the fact that the net income from 370 million to right now $1.1 billion of net income. Now hopefully, inshallah, in the long run, the company then can translate this into more free cash flow here, because we need to get this free cash flow up to at least a couple of $1 billion, maybe $1.5 billion. That will be really solid, and that will help them increase those margins as well. So overall, really good company. So what we now need to see is where is it heading in terms of valuation side of things. And as you can see here, we've got Morningstar Valuation, Seeking Alpha, Simply Wall Street. I used the dividend discount model and multiples valuation model, and all of that average out gives me $262 per share right now. Current price is 286. That's 8% downside from where we are, so it needs to come back down at least a 10% or so to be attractive again. Now if you think, okay, this company, of course you need to have a margin of safety, and they are reasonable company, they're not basically high flying company, so 5% margin of safety should be relatively okay. That is the buy price of $250 per share. So I'm gonna add this to my watch list for $250 per share. Leave it alone. That is basically slightly higher than Morningstar Valuation. Maybe if it even comes back again, it's not much, 8%. We potentially, it takes a couple of bad days in the next couple of months and you might actually get that chance. So we'll reevaluate it again in a few months, but right now $250 seems okay. Below that will be absolutely amazing, so we can inshallah potentially add to the portfolio. So that's the company I wanted to share with you guys. I've got a lot more other videos planned inshallah in the next couple of days. I will be sharing that with you and with you guys. Like I said, I'm going to do entire portfolio update for individual stocks and all the dividends that I've received for the month of September, which has been absolutely amazing. If you are not part of the Patreon, you probably haven't seen it today, but if you are, genuinely, I was so happy when I saw that. And a lot of that money, of course, it came from a specific individual company that pays around this month, and they pay really nice dividends. But I will give you more details inshallah in the next couple of videos. If you're enjoying this type of content, do me a favor. All I ask you to do, if you don't want to join us here, just like the video, subscribe to the channel, share with your family and friends, and inshallah we can get more brothers and sisters investing in the stock market and make some halal money inshallah in the long run. Thank you very much. I genuinely appreciate every single one of you out there. Have a wonderful day. Assalamu Alaikum.